Thanks for joining us today. The first question is a broad question. Where do you see the industrial/warehousing sector heading in 2020 in Central Iowa? You want to kick it off?
Okay. Sure. Chris Curran, R&R Realty Group, and we've got a portfolio within R&R of about 2.5 to 3 million square feet of industrial space. I also work a lot in the office sector, but as far as where I see 2020 heading from the industrial market, continued activity, a lot of optimism. There's a big wave of new construction, new development that's going to be hitting the market in 2020. You've got the big fish Amazon that's been announced, at least in Grimes, and maybe not in another location, but they've hit the market. So I think a lot of continued development and activity, just falling right behind their footsteps. But as far as the market, I see continued strong activity for 2020.
Austin Hedstrom, Vice President, Brokerage, JLL, represent buyers, sellers, landlords, tenants, whether they're finding space or looking to sell or rent space out to tenants. Also do site selection and consulting. I echo Chris's thoughts. Momentum with industrial is very strong. We're tracking, JLL, our research department is tracking about 3% vacancy rate. And we see continued growth, and there's a number of spec projects that are currently under construction and or proposed, and I believe in 2020 there'll be some new ones announced as well. So for the industrial market, it's kind of, in my mind, the golden child. It's always been kind of the apartments the past number of years, and I think the industrial market has overtaken kind of the apartment side, and we're going to continue to see growth. So,
Derrick Lord with the City of Ankeny Economic Development Department. I think 2020 is going to continue to be strong, as my colleagues here have shared. I do think that if there is any type of slower growth, it's going to be related to the fact that there have been so many expansions. Companies in the metro that have needed to expand, relocate, there's been a lot of that activity. So while I think there'll still be pretty significant growth, if it's not as significant, it's a result of there being a lot of projects that have recently been completed. That being said, Central Iowa's with a strategic location in the United States and a growing population is still very attractive for, whether it be new companies looking at Iowa or even specifically Central Iowa coming from out of state, or companies that are in other parts of Iowa looking to tap into Central Iowa's growing population. So I think the growth is going to continue to be strong and definitely one of the strongest sectors out there. But we could see some changes given the fact that there have been so many expansions, but overall it's going to be robust.
Jacqui Johansson. I'm principal and founder of Shattered Glass Development here in Des Moines, and focus on brokerage as well as equity attraction for industrial and all other segments in commercial real estate, and also co-working. So what I would say about the market in 2020 is that there is a lot of investment dollars that are ready to flow. So there's a very pent up amount of capital market researchers and economists say that highest ever amount of investment dollars that are still being held by funds that are ready to invest. And of course, in the industrial market with e-commerce and the last mile, there's a lot of activity, as my colleagues have been talking about, and investors are watching very closely and are interested and have an appetite to invest. And that includes the tertiary markets. As you look towards the coasts, cap rates are getting to a point where they're really continuing to start to look interior in the country and to tertiary markets. So that's good news for Des Moines.
Darren Ferguson, Ferguson Commercial Real Estate Services. I guess I see the 2020 industrial market, again, continued growth, albeit I'll tread a little lighter on the amount of second generation space that'll hit the market back in 2020, as well as the amount of time it takes to lease up the new spec space. I think as a whole, from our perspective, we've seen more non-industrial uses taking industrial space as a backfill type tenant instead of having the third-party logistics company come in and gobble them up in a hurry, taking them over. I'm hoping that the Amazon effect will hopefully push that over, and we will get more actual logistics companies and third-party distributors, last-mile distributors, whatever you want to call them, leasing up third-party space in the market.